before we would engage with a broker like yourself, we're underwriting deals, we're sending letters of intent. We want to make sure that, you know, the deal pencils in a way that makes sense for us. Do you have like advice on like a type of rate that we should be dropping into our underwriting as just a place? Obviously 6.5 to 9, that creates very different results. Right. Like, is there a number that maybe we drop in there to feel safe with or close enough?
75% mark. So if you can analyze whatever your rates are, right, the high end, the low end, kind of where your deal's falling. So we're underwriting 75% mark of 9.5 to that 3% delta range. So call it 825, 8%. If I'm like in a secondary market just outside of Dallas-Fort Worth, I'm probably underwriting to 775, 8% maybe, just as a buffer. Secondary, tertiary markets where I think the rates might be a little tougher. Not as many regional banks that service that area. I'm probably going to be a little bit higher. You know, West Texas, I'm probably hitting 8.5, 9. You know, oil markets out there. What kind of economics are in those markets? So all of these things kind of play a factor, and I don't mean to dump a whole bunch of stuff. There's a lot of things that factor in here, but you can take the basics and be pretty close. But we kind of start off at that 8, 8.25. Yep. And maybe adjust from there. You know, maybe you have a couple conversations with a couple credit unions. They priced you at 675 and 7. So that would be a hell of a day if my numbers worked at 8. So, you know, and then you can adjust your model and et cetera. But that's how we promise, that's how we market the deal to LPs. If we are going to raise capital, is we want to have that conservative basis over, you know, under promise and over deliver.
I think another just very quick point on that is when we're underwriting deals, making sure we're acknowledging where we're guessing. Because if you put in, let's say 8.5% as your mark, and that's your guess, and the deal doesn't work, well, sometimes we can fool ourselves into thinking that 8.5 was the known, but it's a variable. So you don't want to throw the deal out based on an inaccurate guess. And so if you go, oh no, I couldn't do this unless it was 775, well, go out and speak to somebody and get the number to confirm the guess, right? And I harp on this. Some of you have heard me say it before because it's bit me before. I made guesses and then almost, you know, killed a deal because of it, when all I had to do was verify that I wasn't a good guesser and the deal worked again, right? And so you want to acknowledge where your uncertainties are and double check them before, you know, you take the deal out back behind the barn. Yeah, and
for amortization, we get this question a lot as well. Where does the amortization fall? For most banks, most firms, they'll look at how old the property is. You know, when was it constructed? Has any improvement? If it was built back in the early 90s, if no improvements to roof and structure since then, you know, we're probably looking at a 20-year amortization, unless there's CapEx built into the budget and we can get the appraiser to give us, you know, 25, 30 years remaining life. Credit unions match the amortization exactly to whatever the appraisal says of reasonable life remaining. So you can get 30-year amortizations with credit unions if you can get, you know, the appraiser to give you a 30-year remaining life. So that's another piece of that will affect your profit numbers, but interest rates typically the bigger question. But I think the amortization is important as well.
For sure.